What is going on, everyone? I hope you are all having a fantastic day. So if you pay any attention at all to financial news, or even if you just watch YouTube videos occasionally here on this niche, then you've probably heard a lot of people talk about how bad inflation currently is and how bad it could get. And sometimes that leads to a lot of fear and panic and uncertainty as to what the best way is to protect yourself against inflation. So with the price of pretty much everything going through the roof lately, today I want to talk about what is causing this inflation and subsequent price increases, where it is likely headed in the near future, and most importantly, talk about ways that you can protect yourself against inflation and even profit from it. Alright, let's jump right into it. So first of all, I know the topic of inflation is probably not the most exciting thing in the world, but the fact that you clicked on this video shows that you were either interested in the topic because it is really relevant, or maybe you were even concerned about the effects of inflation on your money. So I don't want to waste too much time talking about what exactly is causing this, because it's more important to talk about how to take advantage of the situation. But long story short, we kind of have the perfect storm going on of increased money supply, which has been caused by trillions of dollars being dumped into the economy via stimulus packages. Plus, we have limited supply on a ton of commodities and other goods like lumber, housing inventory, vehicles, and a ton of others. And on top of all of that, we have increased demand for many of those goods, because recent events in our world have led many people to leave the cities, buy or build homes, buy cars because they're now commuting to work, and many other things that are currently in very short supply. So without diving into the boring economic theory too much, long story short, we have very high demand for certain goods that are at record low supply, and when that happens, prices typically go through the roof. Plus, when you add a ton of money being dumped into the economy on top of all of that, well, that means that each dollar now has less value, and that only makes the problem worse. And just so we're on the same page, inflation is basically the decline in your purchasing power with a given currency over a period of time. And that's why your grandparents talk about how they used to be able to buy a chocolate bar for a penny, and now it costs over $1. And really, that is just a long-term example of the effects of inflation. Now, I want to be clear that inflation is healthy and necessary in order for an economy to grow at a healthy rate. And that's why the United States Federal Reserve specifically tries to keep inflation around 2 to 3% each year, which allows the economy to grow at a healthy pace without being too efficient, which can actually cause other issues on its own. Okay, but I think that's enough talk about economic theory for one video, so let's answer the question of where are these prices likely headed in the future, and more importantly, what can you do to protect yourself from inflation and even profit from it? Well, the thing about predicting the future of the economy is that it's basically like basing a prediction on a prediction on a prediction. And what that means is you end up with a jumbled mess that should one thing change, well now everything is completely wrong and it doesn't end up happening the way you predicted. So, especially in the short term, it is very difficult to accurately and consistently predict what is likely to happen with inflation and the economy in general, and therefore the prices of those everyday goods. And while the Federal Reserve does say that they believe it will be a short-term thing and that supply will eventually catch up with demand, it's very likely that it could go in the other direction, or the Fed could end up being correct. But either way, I can almost guarantee that there is very likely going to be some sort of inflation for the US dollar in the long term, barring any insane events, which I think we have had enough of. So regardless of whether inflation is 20% or 2%, you want to be protected from it. So the most general and easiest way to protect yourself from inflation and even take advantage of periods like the one we are currently living in is actually locking in your debts or liabilities at fixed interest rates, meaning it never changes over the term of your loan. Now, I know that may have made absolutely no sense, but don't worry, I'm going to break it down to make it really easy to understand. So, usually, high inflation means that the Federal Reserve is going to raise interest rates in response, meaning if you want to go and take out a loan and borrow money, then you're going to actually pay more money in interest in order to get that loan. However, we're not quite at that point yet, and interest rates are still very low, meaning it is currently cheap to borrow money, and they will likely remain there for a good amount of time. And what that means is right now is a fantastic time to lock in assets like a mortgage or your house at a low interest rate so that when rates do start to go back up in the future, you are basically protected against that and are locked in at those low interest rates because you have a fixed interest rate. So, for example, let's say you have a mortgage that is $250,000. Well, right now, you might be able to get an interest rate of, say, 2%, for example, depending on a ton of other variables. And on that loan, you can get a fixed rate, which means it is never going to change regardless of where the Federal Reserve moves the national interest rate to. So by locking in a low interest rate now, not only are you protecting yourself from the potential of interest rates going up in the future, but in a sense, you're also protecting yourself against inflation. Because remember, inflation can cause higher interest rates. Now, perhaps real estate is a bad example for the current situation because, as many of us know, real estate prices are absolutely through the roof right now, and it's actually a terrible time to buy a house. But this same idea of locking in a fixed interest rate when interest rates are low applies to any number of things, including business funding or really any other type of loan on an asset or liability. But going back to our real estate example, maybe you already own a home and you have a mortgage on that house. Well, that means that now is a fantastic time to actually refinance that mortgage and any other kind of loan and lock in that low fixed rate interest rate. That way, if inflation does start to really get out of hand and the Federal Reserve responds by raising interest rates, you have nothing to worry about because your interest rate is locked in, even if the term of that loan is 30 years or more. So depending on the size of that mortgage and what rate you're able to lock in now and where those rates go in the future, that could easily save you tens of thousands of dollars in the long run, if not more than that, and in a sense, you are then profiting from inflation. But the other more obvious way to profit from inflation is by wisely investing your money in certain inflation-protected securities. Now, most people would agree that something like the stock market in general is a good way to protect yourself against inflation because, say you're earning 8% per year on your money, and inflation is 4%, well, that means that not only is your money keeping up with the growth of inflation, but you're also coming out 4% ahead at the end of the year, meaning you're actually getting ahead of inflation. But there's actually certain securities that you can look into that specifically are aimed at protecting your money from inflation. Now, I want to be clear that this is not financial advice, and as always, you want to make your investing decisions on your own. But I do simply want to provide you with the information of the different securities that are available to you, so that you can go out and make the best decision. So there's lots of examples of inflation-protected securities, but one of the most commonly referenced examples is what's called a Treasury inflation-protected security bond. Now, if you know how a bond works, then you're probably thinking that investing in something like a bond would be one of the worst things you could possibly do during an inflationary period. And with a normal bond and how it is structured and how it works, you absolutely would be correct, because something like inflation is horrible for fixed income instruments like a bond. But that's where inflation-protected bonds can help. Basically, this type of bond is tied to the CPI, which is the Consumer Price Index, which monitors the average price of everyday goods over a given period of time. And what happens is when the CPI rises, as it currently is, so does the value of your Treasury inflation-protected security. So again, that is a very rough example of how this type of bond works, but it's definitely something that I would recommend doing some more research on, and there are a lot of other types of inflation index bonds that are directly aimed at helping you protect your money during inflationary periods. So regardless of what you take away from this video, I do want to remind you that number one, the US dollar specifically is the most widely traded currency in the world. And number two, there have been periods in history where we had pretty high inflation in the US. And while it absolutely was difficult for short periods of time, in the end, the Federal Reserve gets things under control and it all balances out. So if we're specifically talking about inflation of the US dollar, which is largely what this video is focused on, then just remember to take a deep breath, and while gas prices going through the roof and overpriced gallons of milk might sound scary, it's all going to be alright in the end, and by implementing these strategies that we talked about today, you are protecting yourself in ways that many others are not even thinking about. So I would love to know what your plan is to not only protect yourself from inflation during this current period, but how you are actually going to profit from inflation by investing in things like inflation-protected securities and other types of investments. As always, if you did get value out of this content and you want to help support me, the easiest way to do that is actually checking out some of my favorite financial tools down in the description below and getting some free money while you're at it, which is always an added bonus. Be sure to hit the like button and subscribe to the channel for more great content like this in the future. And of course, thank you so much for your time. I really do appreciate it so much. Take it easy, and I'll see you in the next one.